Next, let's have a look at the purchase of inventory on credit. Inventory purchased for 20,000 Rand on credit. This transaction will be recorded in the purchaser's journal at cost. So, let's have a look at the accounts involved. Again, we are dealing with the inventory account. And because the purchase was made on credit, we know that we'll be dealing with a creditor's account. Remember, the transaction must be recorded at cost, in this case 20,000 Rand. Inventory as an asset increases on the debit side. And we know that creditors increase on the credit side. At the beginning of this section, we mentioned that the gross profit is determined by using the trading account. So how does this work? Firstly, we know that gross profit is equal to sales less cost of sales. So we know that we need to close off our sales account, and we need to close off our cost of sales account. These balances are then transferred to the trading account. So firstly, sales is an income, which increases on the credit side. So in order to close off this account, we need to enter the transaction on the opposite side, being the debit side. This value is then transferred to the credit side of the trading account, and the sales account is now closed off. Then we need to close off the cost of sales account. Cost of sales is an expense which increases on the debit side. So in order to close off this account, we will enter the value on the credit side. This value is then transferred to the debit side of the trading account. The cost of sales is now closed off. These transactions will all take place in the general journal. The balance of the trading account, which is then sales less cost of sales, will now show us what the gross profit is of the business for the period concerned. So what would happen if a business needed to return some of the inventory or merchandise that was purchased from a creditor? Remember that we're dealing with a creditor here. So the merchandise was initially purchased on credit. So merchandise to the value of 1,000 Rand is returned to a creditor. This transaction will be recorded in the purchaser's returns journal. So in this case, inventory will not be increasing, but will be decreasing. So the one account we're dealing with is inventory. Now inventory as an asset will decrease on the credit side. This was to the value of 1,000 Rand, so we will credit the inventory account with 1,000 Rand. The other account involved will be the creditor's account. Now because we are returning some of the merchandise to the creditor, this then in effect means that we owe them less. So creditors decrease on the debit side. And thus, we will debit creditors with 1,000 Rand.